Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Hopefully you guys had a very nice weekend so far. Now keep in mind, all of the options plays for today's video are going to be for selling options, more specifically for selling put options as part of the larger wheel strategy that I like to run on the channel. Why do I enjoy selling puts so much, and why do I do it with 80% of my trading capital every single week? 3 very simple reasons, guys. Number 1, it's a very easy strategy to learn, manage, and thereafter scale up or down. Not a very complicated strategy at all. Anybody can really do it, and it's very easy to scale up or down depending on the size of your account. Reason number 2 why I love the wheel strategy is, of course, because of the low time requirements. Only about 15-20 minutes a day, a little bit of prep at night, and you are all set. It's basically set it and forget it, and it's very passive. So if you have a full-time job, if you love traveling, if you're running a business, could just be a nice strategy for you to look into. And reason number 3 why I love the strategy so much is, of course, the high consistency rate and the high win rate as well. 90 to 95% of all these short put options that I ever put into the market usually always result at the end of the week with the premium just ending up in my pocket. And for those times where we get assigned, well, we're buying high quality companies at very attractive levels, and thereafter we'll just sell covered calls and get out of the positions for even more money. Seems very simple because it actually is. In today's video, we're going to take a look at a couple things, guys. 3 things to be specific. Number 1, what are the expectations for the week? Yesterday, I put out an absolutely huge video that took me a long time to prepare in terms of where do we stand right now in the market. We have a few short-term warning signs in terms of market breadth and how extended the market is to the upside, which could possibly bring some caution leading into this week. So we'll do a quick little rundown of what I was talking about yesterday. Of course, if you want the detailed explanation, just go back and watch the first 30 minutes of yesterday's video, but we'll give some context as to how we might establish some positioning over the course of this week. How are the technicals looking? How are the fundamentals looking? Do we have any earnings to pay attention to? Do we have any macro data to pay attention to? And all the basic volatility catalysts that you should have on the horizon for this week in the markets. Number 2, we'll be going into the strategy rules because, of course, if you want to have a very high consistency and a very high win rate, you got to have a strategy and you got to respect the rules. So I'll be giving you guys a 1-minute rundown of the rules just to make sure that you guys have some good direction and some good structure. And then, of course, we will get into the top 5 options plays of the week. And as per usual, I have about 10 bonus plays for you thereafter, so make sure you stick around to the end and watch all the bonus plays as well. That being said, guys, let's jump right into it. So in terms of number 1, guys, the expectations for the week. Well, we could talk about some things we have on the table, but of course, the government is shut down in terms of most macro data releases. But we have some things to pay attention to midway through the week. So you'll see on Monday, we get the ISM manufacturing PMI. That's important because it's been fairly soft, and it is showing that certain segments of the economy, namely manufacturing, have been soft for the past 6 months. You don't want to see broad deterioration in this, or it could impact the markets. This is one volatility catalyst for the Monday session. Thereafter, Wednesday is going to be a big one. We get the ADP employment change. Now, we are supposed to get the non-farm payrolls on Friday, but the government is closed. So if the government is closed, we will not get those non-farm payrolls. We will have to see, but what we will get is the private data from ADP, a private corporation, of course, and it says that we're supposed to be gaining 25,000 jobs in the private sector in terms of net new job openings. That will be a welcome benefit because last month, of course, we went down 32,000 jobs overall. Pay attention to this number. If it comes in wildly negative, the markets are not going to like that. This is probably going to be the biggest news release of the week. That same day, we get ISM services PMI, and Friday is really a toss-up. We are supposed to get the non-farm payrolls and the unemployment rate and average hourly earnings, but if the government stays shut down, you're probably not going to get it. So this one, tentatively on the table, right? If the government opens up, well, Friday is going to be a big day. So try and wind down your positions before Friday if you don't want to end up with some crazy surprises, because this will be a data dump. We haven't got this data right now last month. And if we don't get it, or if we get this month, they'll kind of give us 2 months in a row. So that could be a very volatile day if the government does open up over the course of this week. Now, in terms of other things that we have to pay attention to, guys, it's going to be a very big week in earnings. Now, we don't have any major corporations like big tech names or companies with large market market caps that could sway the direction of the markets. However, I know that a lot of people enjoy playing, a lot of the fan favorite names, and all those names have earnings this week. So be very careful. Usually on the channel, I do not advise to run the wheel strategy or selling puts on stock into earnings, because earnings can go either way. A company can have great numbers, but then somehow go down if Wall Street doesn't like something in the report. Shout out to Netflix, shout out to Meta, and shout out to a whole host of other companies that reported great earnings, but saw their stock prices go down. So if you don't end up with any bad surprises, just try not to play any of these companies that have earnings this week. And I know it's a bit complicated because there's a lot of fan favorite names here. Monday, Palantir, Hims and Hers. You got Navitas, a lot of people playing that one too, and other companies like that. Tuesday, you got so many: Uber, Shopify, AMD, Arista Networks, Supermicro, Spotify, other names like Axon down here as well. A lot of fan favorite growth and tech names in the mix over the course of this week. Wednesday, we get Robinhood, AppLovin, McDonald's, Qualcomm, ARM, even Elf Beauty, which my big head is in the way of, unfortunately, Elf Beauty. Thursday, you got a bit more, right? Some quantum computing names: Trade Desk, Open Door, Iris Energy for a lot of those data center plays. That's going to have an impact as well. DraftKings. So you can kind of tell, right? This week is all about the fast-growing tech names that people know and love very much. And that's not everything on this list, right? There's more that are just not even on that list. And you can take a look at this page right here, right? In terms of the other ones that you could possibly be having, right? You got Kava, you got Zeta, which a lot of people enjoy playing. You got Duolingo, you got DoorDash, you got Lyft, you got Airbnb, you got Square, things of that nature. So there's so many companies on this list that I usually play on a weekly basis, but this week I will not be playing them before they report their earnings results. So just pay attention, guys. If you're looking to sell puts in the market this week, just double check if a company has earnings, because of course it's going to be very volatile, but none of these companies are truly going to move the market on their own in terms of sentiment or just swings in market cap that could impact the SPY and the QQQ. Maybe, dare I say, only McDonald's. If they give some really bad earnings and say the consumer is falling off a cliff, well, it may just play into some of the narratives that I was highlighting in yesterday's huge video, where we contrasted the short-term bearish catalysts at play. Take a screenshot if you want. The short-term bearish catalysts versus the medium and long-term bullish tailwinds in the market right now, which leads me to point number 2. Where do we stand in the market in terms of market perception, market sentiment, but also the internals of the market? So I did a massive video on this yesterday. I'm not going to go over everything again, but the summary of it essentially was the fact that the Hindenburg omen flashed red. Now, this is something that happens in terms of a technical signal where your breadth is very low, but yet the markets are very close to the all-time highs. We've been noticing for a while now that breadth has been lacking, and it really started falling off September into October. Percentage of stocks above their 20-day EMA at a very low read of 40%. Percentage of stocks above their 50-day EMA, very low read. Arguably haven't really been this low much since the tariff sell-off in April, and we're kind of losing more and more ground here on the percentage of stocks above their 200-day EMA. Yesterday, I showed a whole bunch of charts. I'll show a few of them again, right? In terms of the Hindenburg omen, it's something that flashes, of course, when the breadth is very low, but the markets are pushing high. It just means that there's a lot of concentration right now into a very few amount of names. And you'll see right here, it's flashed twice while we've been up here. Sometimes the hit rate is very good and leads to big declines. Other times, the hit rate is decent, like back here in late 2024, early 2025, but you didn't really get much out of it, right? You got a 3, 4, 5% pullback on the indexes. You can see that back here in 2019, prior to COVID as well, back in 2017, back in 2014, 2013. So not every time that this flashes are you going to go into a huge correction, but it just means that there's something wrong that shouldn't be happening, and it does have to raise a few red flags, right? Here's the performance of the markets after the Hindenburg omen. You can see that 1 or 2 weeks later, the hit rate is kind of mixed, right? There's a lot of variance. Sometimes it's red immediately, and sometimes it takes 1 to 2 weeks before the markets actually start to correct in the direction of the low breadth. So please keep that in mind. Moving on further, right, you can see a clear divergence here from the August non-farm payrolls, early September, where the AI trade has been very strong. And I've talked about this in all of my videos over the course of the past 3-4 weeks at this point, to where if you're not in AI, you're probably not having good performance, and none of the other trades are really working. Consumer cyclicals and the rest of the market diverging a lot. You can see that even better on this chart right here. If you're not in, well, communication services is Google, Meta, and Netflix. That's what's carrying this one higher. and technology. If you're not in those, all the other sectors, guys, relative strength versus the S&P have been extremely, extremely soft, especially more soft since late August into early September and now through October as well. And one last chart here shows you that the top 10 stocks right now in the market represent 41.4% of the entire S&P. Now, obviously, this is magnified because those names have been performing well. And you know which names I'm talking about. It's most of all the big tech names and the AI specific names as well. But the reason that this is so high is because they've been doing well, but everything else has been doing so bad. So obviously when that happens, this kind of goes exponentially higher, as opposed to if the market was very broad, like let's say the whole market was broad and going up 2, 3, 4%, but for every 2, 3, 4%, the rest of the market gains, big tech goes up 6, 7. Well, this chart wouldn't be going up exponentially as quickly as it's doing, right? So keep in mind, guys, we have some breadth concerns, and I did a huge video on it yesterday. It would be impossible for me to recap that 30-minute segment yesterday, but it led us into the following thing, to where we were contrasting the short-term bearish narratives to the longer-term bullish tailwinds. And in conclusion, what I derived from that is the fact that, right, you are kind of in a position right now where most people, when you see some big red flags like this, a lot of the times it's better to kind of take some risk off the table. The conclusions are kind of right there. I won't be going over them again. I'll be referring you to yesterday's video just to save some time in today's video, of course, right? But you got to make a decision, yeah? Since right now we're in a very cloudy or rainy environment, right? We got a lot of conflicting short-term bearish narratives versus long-term positives. As a result, the market is not so clear anymore, right? So when that's the case, I always say the following: you are driving your Ferrari. Are you driving it in the sun or in the rain? When we're driving it in the sun, we can kind of put our foot on the gas and we can be a bit more aggressive with plays, and we can broaden our horizon of the type of plays that we want to play with the wheel strategy, right? When you're driving in the rain, you have to cut your position sizing down, be a bit more conservative, and concentrate into the highest quality plays that you can possibly find in the market, your favorite plays. Because at the end of the day, if you get assigned on the wheel strategy, you have to hold the bag, and you may as well be holding a bag of high quality companies that you don't mind DCAing. So that is the outlook for the week. As of right now, guys, I mean, the bulls are still in full control in the technicals, right? That's not the question here. The question is, for how long, and will this deteriorate if the breadth of the market continues to deteriorate as well? We got some nice support down below here, but in all reality, guys, we're very extended on the weekly from the 12 EMA. You're very extended as well from the 12 monthly EMA. It's been 6, 7 months of upside in a row. We are coming into November and December, which seasonally are supposed to be some of the best months in the market, but statistics are odd, right? September and October were supposed to be some of the more flat or bearish biased months, and they were not. Is this time going to be a case of November, December is supposed to be strong, but we started off weak? I don't know. We'll see. But there's definitely a few red flags in the market. We are pretty far away from a lot of our moving averages, and usually that does not last too long. I'm not saying the markets are going to come down in a magical fashion this week and crush everybody, but you just have to be a bit more cautious in your positioning. I will still be playing the market, but I'm going to reduce my position size and obviously tighten my horizon of stocks that I'm willing to play to the highest quality, highest conviction stocks for me. So that is those are the changes that I will be doing in my own portfolio while I'm trading the wheel strategy over the next few weeks, until we either get one of two things: broad market breadth improvement, or number two, an actual 5 to 7% pullback on the SPY, the Qs, pull back, cool off some of the daily, weekly timeframes, reset, give us some better price action levels for some entries. So those are the two things that I'll be waiting for before increasing my position sizing back to full size and back putting my foot fully on the gas. So hopefully that makes sense. That is what we're looking for the upcoming week. Now, moving on to the S&P 500 here in terms of our strategy rule. Not the S&P, but it's just on the chart, sorry. The strategy rules, guys, very important, especially when market breadth is a concern. There's a few red flags in the market right now. You really have to respect the strategy rules, guys. Number one, right? A lot of these I went over in the past. I will not be going over every single one of these rules individually in today's video just to save time. But what I will do is leave a link down below in the description to a former time where I used to cover these rules in detail, line by line, every single Sunday. I'll leave you a link. It's about 10 minutes long. Just pay attention, guys. Go watch that video in the description. It'll be titled Bullish Wheel Strategy Rules Explained. Go watch it. I explain every single one of these rules in detail. And coming into this style of market where there's a bit of uncertainty, right? We really want to be respecting all the rules, especially the fact that we only want to be writing short puts on high quality and high conviction companies. We want to plan for possible DCAs as well. If the market drops and assigns us, you want to have some buying power room. So I'll give you an example, right? If my full size writing, I don't know, Amazon contracts is usually 2 Amazon contracts, moving forward, I'll only be doing 1 and keeping some buying power on the side. So I'm trimming down my positioning while still playing the markets overall. You obviously also want to be playing stocks that are in weekly support levels already or areas of breakout retests and monthly uptrends and long-term ranges. Essentially playing stocks with good long-term price action and favorable narratives. But as I said, for a full description of all these rules and why each of them matter and how they all tie together into the overall strategy, just take a look at the video in the link in the description, because right now we will jump immediately to the top 5 options. And here they are. Company number 1 for the upcoming week is going to be one that everybody knows and loves, and it's going to be Amazon. Now, I know what you're thinking. You might be saying, how can we possibly pay Amazon here? It gapped up, went up 15%. It was up 9% to end the day on the Friday session. Yes, but one of the strategy rules, guys, is sometimes I'm looking to play breakout retest. This is a very big level. The top of 2025 February and previous resistance as well. We have now cracked through it, closed a very beautiful monthly candle for some monthly expansion. As a result, I do want to play some of the pullbacks if we do get them into the prior resistance range, which will be newly established support. But as I said, I'm not going to be going full on size. I'll be playing maybe 1 or 2 contracts here and saving half the buying power if ever the markets really erode and Amazon gives back its entire earnings move. I want to save some buying power to be able to play it in the lower range of support, but I do want to take a stab at playing this level initially. Reason number 2 that I want to do that is because of the valuation, right? If we pull back down into the 230s, we did the valuation after earnings at 250. If you take 10% of that, 10% off of those highs, and we come back down into 230, you're trading under a 34 price to earnings for 2026 and a very manageable 1.5 peg if you pull back down into 230. And you have all of this longer term guidance and these longer term numbers that Amazon just gave us, which does make it a very attractive investment moving into the end of the year and even into 2026. So I am a big fan of pulling these pullbacks, but I will be doing it in 2 steps. Some here and saving some money in the event the markets really unwind because of breadth concerns or another bearish trigger that could possibly be a catalyst, right? And playing it down there. So the expected move for Amazon this week is 236.64. Now, if you don't know where to find the expected move, you can go to this website right here, barchart.com. Just type it into Google, bar chart, expected move, and then whatever stock you're looking for, you'll come to this page right here. You want to look at the lower price of the expected move. That is also one of the strategy rules. You want to always be writing below the expected move. It just improves your odds of not being assigned. That being said, let's take a look at Amazon options for this week and see, can we get below 236 comfortably into our support range? Let's have a look right here. What I'm looking for, guys, at these strikes is 0.5%. 0.5% is the ROI that I want to make every single week. It's a very decent annualized ROI, especially while compounding week over week, but it's also a percentage that doesn't lead to a lot of assignments. It's what I like to call the sweet spot when you're looking for premium versus risk to reward, right? So how do we calculate if we're getting 0.5%? Very easy, guys. Just divide the strike price by 2 in your head, and you should be looking for roughly half of that on the bid, right? So half of 235 is about 117. So you know you need to find 117 on the bid right here. If you want me to do it on the calculator just to show you guys, right? 117 divided by 235. There's your 0.5%, yeah? So at 235 right now, we are getting some decent premium. You can see it's 126, which is above 0.5%, but we're also not being super greedy, going too close to the market and leading into high chances of being assigned. We're also not going too low below the market and kind of wasting our time, just not getting enough money for the capital that we're putting onto the trade. So for me, the strikes this week, guys, 235 down to 230. At a first glance, 235 looks good, but if on Monday morning Amazon pulls back a little bit more, you guys know the drill. Try to get as deep as possible. You want to follow the market down, and as a result, I'll be a fan of looking for my 0.5%, 235 down to 230, as low as I can possibly get while still getting 0.5%. That is stock number one. Stock number two is another fan favorite name with good momentum and good fundamentals, and it's going to be SoFi. So SoFi has pulled back from earnings. The reason that I like it is because we're not coming into it, but we're close-ish to a very big level, 25 down to 22. SoFi has some good volatility. You do not need to play this one too close to the market. The monthly uptrend is nice, however, extended. So I'll be looking to play some short puts down into here. If you get the monthly retracement, that's a fantastic area of support, 25 to 22. It's the prior 2021 and 22 highs as well. And we know already that the valuation after earnings, we did it on the channel at 31, the valuation is very good. So if you take from there down to 25, if you take 15, 20% off of that stock, well, you know you're going to be trading around a 1 peg, which is a very attractive valuation for a company growing 18% revenues per year for the next few years and 44.6% earnings growth as well. As a result, I do want to be playing any and all SoFi volatility. If they offer up those trades, the expected move for the week right now is 27.92. But I won't be playing here. I'll be trying to play a little bit lower because the options chain is giving us some really good premiums. If you pull up the options chain on SoFi, you'll see what I mean. Take a look down here at about 25.5. You're getting roughly 0.5%, right? Half of 25 is about 12.13. So as a result, these strikes 26, 25.5 are not too bad at all. However, the best thing to do is find SoFi when it comes down early morning, perhaps 3-4% a pop, right? So that being said, if SoFi drops a little bit early Monday morning and kind of just starts to further move down into the price action, into the expected move, which is 27.92, if we get that little bit of a drop and increase in volatility, we will be able to find a bit better premium here on these strikes, 26 down to 25. I want to position my short puts as close as possible to this big support area that I can get, because if they unwind the entire market, SoFi will probably unwind as well into some weekly and monthly consolidation, and I will be a fan of buying the stock lower if it does come down there. I just don't want to play it super aggressive, super close, right? If I am playing super aggressive, super close, let's say my maximum contract size at any given week on SoFi is 5. Maybe I play, if I want to be aggressive, maybe I play 2 here and then wait for a drop and then start to scale into the position, right? That is something that you can do, but just be careful because as I said, right, the markets right now, they're running on very thin breath. You got to be careful for those volatility or possibly short-term bearish catalysts that could rear their heads over the course of the next few weeks. That's stock number 2. Stock number 3 is another very high quality, high conviction stock, and it's going to be NVIDIA. And similar to what you might have said when I showed you the Amazon chart, you might be saying, well, how can we possibly play NVIDIA? It's all the way up here. Yes, this is true. You're looking at a big breakout, but I'll be looking for the good old retest of the area that we just broke out of, basically 190 down to about 185. NVIDIA, from this low to that high, that was like a 20% move. It was a very big move. We went into daily overbought conditions, and if we pull back a little bit more, I'll be a fan, guys, of playing this pullback area into the sub 190 range. Why? The weekly uptrend is still very solid right now. You would be looking for a higher low. And also, NVIDIA just gave us a lot of guidance for the next 6 quarters. They said they would be bringing in $500 billion, which was far above the estimates previously established, right, for the next 6 quarters overall, which gives them a newly established revenue growth rate of 23, EPS growth rate of 22 to 25 through 2027. And what does that mean for their valuation? It means at 206 with the newly established revenues that they're going to be bringing in, they're trading at like a 1.25 to a 1.43 peg, depending on which EPS measure you use, both of which are very good. It says the stock is cheap. And as a result, if we do get that 5-7% pullback, and I can play around the weekly 12 EMA right there and maybe go for just a little bit of monthly consolidation, I'll be a fan. But the way that I'm structuring this, because it is extended on the monthly and low market breadth into consolidation on the indexes could lead NVIDIA to come down, is if my maximum contract size on NVIDIA is 4, I'll be playing 2 here and then saving some buying power if I need to play 2 more down there. That's how I'm going to be structuring this trade to move forward. The expected move for NVIDIA this week is 194.93, high conviction stock, clear narrative, of course, right? But it is slightly stretched right now, but I do want to play it because it's one of my highest conviction plays. Moving on to NVIDIA's options chain, can we find anything below the expected move this week of 195? Closer possibly to the sub 190 range? Well, let me show you on the options chain. NVIDIA has some pretty good volatility overall. So let me just load up the strikes right here for you guys. And as you can see, around the 190 level, you actually do have some good premium, right? If you're looking for 0.5%, half of 190 is about 95. So you can see here that we're clearly getting our 0.5% rule. For me this week, guys, if NVIDIA starts off the week red Monday or maybe flat Monday and then red Tuesday and we pull back a little bit more, well, we'll be getting a bit better strikes as well. 187 and maybe even 185. At a first glance, I don't mind the 190s, but of course I want to get as low as possible, right? If the stock drops on Monday or Tuesday, I'll be looking to hunt deeper into the 180 range. So for me this week, 190 to 185 are the strikes that I'm looking for on NVIDIA, just looking for a very healthy back test of the area that we just broke out of, worst comes to worst type of thing, right? So that is everything for stock number 3. Stock number 4 is going to be another play that I like very much for a few key reasons. Number 1, we're into monthly consolidation. It's Rubrik, right? A fast-growing cybersecurity play. Rubrik's had a pretty good year so far. Nice monthly uptrend, and now looking for some monthly higher lows into all of our previous price action established during the tariff situation. That is the low 70s down to about $63, $62. This entire price action range has been pretty solid. Rubrik's reacted from it a few times already, and the valuation for a fast-growing cybersecurity name growing revenues 23% per year with 79% gross margins, the price to sales is not too bad. It's under 10, which is, a lot lower than the rest of the industry, such as CrowdStrike, such as Palo Alto, such as Cloudflare, a lot of the high-flying cybersecurity names with big valuations, right? This valuation is not so commanding, and I'll just show you, right? They're doing very good things. Analyst price targets are a lot higher than the current stock price right now. They'll be flipping to positive EPS come the end of 2026 into 2027, and also revenue is steady up and to the right, and they do have some very solid products. So as a result, I will be looking to play some Rubrik. This one's been on the top 5 list for the past few weeks, and if we've been playing it right, we've been making some decent money, not even assigned just as of yet. That being said, support is still 73 down to 63. The expected move for the week is 71.49. Let's call it 71.5, right? So let's go shopping on Rubrik's options chain and see what can we possibly find below the expected move of 71.5 for the Friday session. If we look down here, you will see that half of the 70 range would be roughly 35. So you're looking for 35 cents on the bid. Well, funny enough, we can actually find that at 69. Good number, right? That is decently below the 71.5% expected move and also in the confines of this range of support. Now, best case scenario is Rubrik drops a little bit on Monday or Tuesday and frees up even lower strikes. Think the 68, 67. So for me this week, I'll be shopping between the 69 strike and 65, depending on the price action of the market. Of course, we want to be going as low as possible. I wouldn't mind any of these strikes, but of course, you want to trail the market down on any red days. That's the strategy rules, guys. I'm only looking to sell a lot of these put options on red days, not chasing the market higher on green days, because you just open up the door for a big pullback into your face, right? That being said, that's stock number 4, and now stock number 5. This one comes with an asterisk. It is going to be Uber, but you might remember, as I showed you, Uber has earnings on Tuesday morning. So I will not be playing it Monday before earnings, but it has earnings Tuesday before the market opens, right? So Tuesday morning when the market opens, we might be able to play this one. But if Uber skyrockets after earnings, am I going to be playing it and chasing short puts up here? No. If Uber comes down, though, the expected move is about 6-7%. If Uber comes down into the low 90s with some good volatility post earnings, then I want to play it. I've been talking about this stock on the channel a number of times over the past few weeks, and I say whenever it comes down here, lower 90s, I'm a big fan of selling some short put options, mid 80s, where there's a very large area of prior resistance, current support, and the 12-monthly EMA. Uber, this one comes with an asterisk because it's conditional with a drop, right? The expected move for earnings is 90.42. If we come down into it or lower, you will probably find me selling some put options down there. Lower 80s is going to be my target range. As I said, if it just blasts off after earnings, I'm not going to play it. I'm not going to chase it. I'm not going to be showing you guys the options chain because I don't want you guys to get seduced by the premium on this options chain before earnings. That's what usually happens to people. They look at these premiums before earnings and they say, wow, that's a whole bunch of premium. Very attractive. I want to play. And sometimes you play it too aggressively. The stock has good numbers and then it just still somehow goes down 6, 7, 8, 9%. And you're trapped, you're underwater, and you can't really understand why, which is why I always say earnings is a casino. So I'll be waiting for after earnings. If you come back down here, I'll be targeting the mid to low 80 strikes. So that is the play on Uber. But like I said, it comes with an asterisk. It might not be available. But as I told you guys for this week, I'm only looking for my highest conviction plays that have good valuations and good technical levels of entries on any pullback. So that's why I included Uber, because I want to have a look at it after their possible earnings. And that is the top 5 options list for this week. It's 5 of my highest conviction plays in the market. But as I said, I will be playing them with reduced size. 50% of what I would usually throw at them, I'll throw at them. The other 50% I'll keep back because I don't so much trust this market right now in terms of the low market breadth overall, guys. There are a bit of red flags and we cannot disregard them. If you guys just want to disregard them and just go full on risk, that's perfectly fine. But if you ask me for what I'm doing, now's a time where I'm kind of taking my foot a little bit off the gas. I'm still long, I'll still be playing, but I'll be playing them at a reduced size and only targeting my highest quality plays. That being said, that's everything for your top 5. Now, let's jump into some bonus plays. There will be about 10, 12 bonus plays right here, and I'll structure them in 4 different sections. Number 1, 4 growth plays. Number 2, 2 or 3 value names, because we know value names have been getting crushed recently. Number 3, plays for small accounts. If you're working with a limited amount of capital, we'll be looking at stocks with low share prices to kind of accommodate that account size. And number 4, 2 large account size plays. For those of you guys that enjoy playing stocks in the $300, $400, $500, $600 range, I'll be giving you guys 2 of my favorite large account stocks that I'm playing with my own large account as well. I will not be giving you guys the expected moves. You guys are now professionals at that. You can find them on your own, but I will be giving you guys the plays, the setups, why I like them, and where I would be playing. So let's get right into it. 4 growth names. Okay, so play number 1 for the growth section is going to be BITX, the 2 times leverage version of Bitcoin. I've been making a lot of money on this one, and that is simply because Bitcoin has been trapped in a very big, beautiful range. The support area on Bitcoin is 107 down to about 98,000. You can see the bulls have been bouncing out of this one for a few months in a row at this point. Big previous resistance, and support for the markets, and also a very nice area of monthly consolidation. Nice monthly uptrend so far. Now just another leg of monthly consolidation, which could see us pull back into the support range and tag the 12 EMA in the lower 100s. As a result, I want to be playing the 2 times leverage version of it because you can get some good premiums, but not only that, you can get some really good distance here, guys. Lower 100K area on Bitcoin is about low 40s on BITX, and if I pull up the option chain, you'll see what I mean, right? You do not have to play this one too close. Where people go wrong is they get too aggressive with their strike prices. We can easily play down here in the lower 40s and still walk away with 0.5% per week. And if you get assigned, you can tell by the covered call side right here, the covered calls are very juicy, but just structure your entries, right? Don't throw everything all at once at one same strike price too close to the market. You can afford to sell some puts down here if you enjoy Bitcoin, but just don't be too greedy with your plays. Stock number 2 is going to be APLD, one of the big data center neo cloud provider winners recently. The reason I like this one, guys, is because we can get a tremendous amount of distance on our strikes, but this one is not ready yet. I play this one when it has big red days, so I will be waiting patiently, not playing it here or here or here. No, I'll be waiting for big red days, and at that point, I'll structure my entries as follows. I'm going to try to tag the 25 area, which I've played in the past, off of this consolidation area right there, and then I'll save some buying power if they go for the full retracement down to 20, which would be a big weekly retracement back into previous all-time highs right in 2022, and the second area of entry would be all the way down here. It would be a massive retracement, but at that point the stock would be oversold. Right now it's weekly overbought, so I don't want to play it too close, get trapped too close to the highs if the markets do pull back. I want to be giving myself some distance, so this is one that I keep on my watch list. It has some attractive premiums, some attractive implied volatility, but don't play it too dangerously, especially in this market landscape. If you want to play it super close and you just want to go for it and you say, you know what, Screw the bear thesis. I'm just going full bull. I think we're going to blast off from here. That is completely up to you. That is your risk tolerance, right? But if I'm looking to be a bit more conservative in this market, that is how I would be looking to play a play like APLD. Stock number 3 is going to be PayPal. For the simple reason is they just reported earnings and they had pretty decent earnings. However, the stock sold off nevertheless. And once again, we find ourselves back into the infamous 2-3 years worth of a support area, which is 68 down to about 58. Now, this one is pretty good. Number one, because, well, they just became a dividend stock. But number two, they're not growing revenue that fast. But what they are doing is they're doing great EPS expansion right here. An insane amount of free cash flow. At 90% of the free cash flow that they do, they're using it to buy back stock. The amount of buybacks this company is doing per year is like 8-9% of the entire float, which gives them a very low forward price to earnings, a very low PEG, a very low price to sales ratio, at a fantastic free cash flow yield that a lot of people overlook. So PayPal, no, it's not the best growth stock anymore, but the reason that I like it is because the company is kind of backstopping the share price with all that free cash flow with buybacks, which gives me a little bit of comfort if I'm playing it down here. I know that at least we're getting good value in the event that we are assigned. So PayPal for me, I'll still be looking for the lowest possible price, but anything mid 60s, I definitely wouldn't be opposed to. Stock number 4 is going to be with HIMS. HIMS, there's an asterisk on this one as well. They have earnings Monday evening, so I will not be playing this stock until Tuesday. However, we know that HIMS is an extremely volatile stock, right? In the event that they report good numbers, but for some which reason the stock drops 10%, I mean, HIMS is no stranger to that, right? It does it almost every single quarter to where the earnings are going to move 10-12%. That's the expected move. If we move 10% lower, what you might find me doing, guys, is play on Tuesday morning with the remaining volatility. I'll be trying to go for the mid 30s strikes because below 40, I really start to enjoy the valuation of this company. Good revenue growth rates, good EPS growth rates, good customer retention. We'll see what they say on earnings. If they come down 10-12%, you probably will find me playing the lower end of the support range, 35 down to 30, where I think the stock is better value. But once again, I'm only playing this one Tuesday after earnings, but I figured I should give it to you as well because I know a lot of people out there enjoy playing HIMS for the implied volatility and for the distance that you can get on some of the short puts. So just pay attention to that one. Now that we're through the growth section, let's get into some value names because we know value, guys, has been absolutely crushed. I mean, we don't even have to go too far, right? If people just wanted to play the XLP, Consumer Staples ETF, I mean, we're back to tariff lows and December lows as well. Very, very soft right now into the 200 weekly EMA. Is it a good opportunity when the stock comes down to the 200 weekly EMA to play this one? Yeah, the last time it was here was the big October 2023 sell-off. Previously to that, it was COVID. Prior to that, it was the tariff sell-off of 2018. But you can see it very rarely tests this one. The only time before that was like 2008. So this one only tests it when things are going really, really bad. As of right now, I wouldn't say that things are necessarily as bad as COVID, as the great tariff sell-off of 2018 or the great financial crisis, right? So if we just wanted to stick to XLP, there could be a nice thesis for, one contract here at 75, and then another one if we dip down into the 70s area of support. It does pay 2.77% in terms of a dividend yield, and at least this one gives you some broad market exposure. You're not beholden to the price action of one single company. Additionally, as well, you are into daily oversold conditions, which doesn't happen too often on this ETF. That's why I do enjoy it at this initial level of support, but I will be saving some buying power in the event that I have to DCA at the lower levels. It's a value play, right? It's not for everybody, but it could make sense possibly for you. Another value play that I'm looking at is Canadian Pacific. Canadian Pacific has established a 4-year range of support down here, 72 down to roughly 67. Every time it comes down here, I enjoy playing it. However, the stock doesn't have weekly options. It only has monthly options. So the next contract expiry is going to be for November the 21st. So if I'm looking for 0.5%, guys, I'm going to need to get 0.5% per week, which means I need to get 1.5%. I need to get about $1 here, right? So what I'll be looking for is maybe place a limit order for about $1, $1.10 down there at the 70 strike, because I really enjoy playing this level. Nothing's wrong with the company specifically. It's just part of the whole value trade sell-off, right? Fantastic net margins for the business. And additionally, guys, the stock, I mean, the analyst price targets are mostly all above. And look at the EPS. Next 4 years, it's fine. The revenue for the next 4 years, it's fine. So this is definitely a company that I want to play, right? has been doing nothing for 4 years, despite improving its fundamentals. That's usually when I enjoy start playing some of these value names. Name number 3 could be something like MO, right? Altria, cigarette brand, of course. They've been pulling back, and they're coming down hard into support. Look at this fall off after earnings. We are now oversold on the daily RSI. The RSI is 20. When does that usually happen on MO? Well, you can scroll back, and I'll challenge you to find it. It was back here in June of 2022. Usually when we hit these big daily oversold RSI levels, it can be synonymous with a short-term bottom, and you can get a bounce. So, especially when you combine that with a nice support area, which is 56 down to 51, could be a very interesting play. Essentially what the bulls are going for here, just going for a monthly back test. Beautiful monthly uptrend, big monthly back test. So I do believe the bulls will kind of hit the air brakes right here for this range. So if Ultra is something that you may like, it could be something that you would be willing to maybe look into. Those are just my thoughts on some value names that I'm looking into more closely. If I wanted to balance something that was a portfolio that was a bit more tech heavy, right? Now, I have 3 plays for you that are for small accounts. Number 1 is going to be SentinelOne. I talk about this stock a lot because I really enjoy it down here, right? You're talking about a few years worth of range of support, 2-3 years almost worth of a support range. In that time, though, the company's been doing nothing but improving its fundamentals. You can see here that all the analyst price targets are above the current stock price. You can see that they're now flipping EPS from negative to positive, and revenue growth rates are very good. Matter of fact, we did their valuation after their most recent earnings, and we derived the fact that, yeah, this stock is representing some pretty good value down here, like in around 19. It's a 1.67 peg and a 5.86 price to sales, which is very cheap for cybersecurity overall. At the base and bull case scenarios for price expansion give us some pretty good numbers per share into 2026, right? The base and the bull say that this stock could possibly be trading into the 30s. So down here at half the price, you know, it is fairly undervalued in my opinion, or there's good value down here, especially in confluence with a nice support range. So for me, SentinelOne, 17 down to about 14 is the range that I enjoy playing short puts if I'm looking to play it with a bit of a smaller account. Stock number 2 that could be interesting is Rocket Mortgage. Now, Rocket Mortgage just reported earnings last week. They had pretty good earnings. They missed on revenue ever so slightly, but EPS was the highlight for this company. They've been acquiring different brands such as Redfin and Mr. Coop Mortgage over the course of this year and really consolidating themselves as being one of the largest online mortgage players. That being said, you can notice big head and shoulders, which is why I want to play this one if they come back down here. I'll be targeting the whole $15 down to $14 range. Good previous price action levels, right? Previous resistance, support a little bit, big resistance for a long time. And now if we come down into it again, I'll be looking to play this area again, right? A lot of the moving averages are there and the valuation down there makes sense. So if we have a smaller account, could be an interesting play, 15 to 14, and it does have some secular tailwinds, namely a rate cutting cycle ahead of it, right? That is it for play number 2 of the small cap names. And then lastly, or rather small share price names, lastly, DLO. DLO, fast growing fintech provider for essentially it's located in all the areas that you don't traditionally have Visa, MasterCard networks, or some of the larger fintech players in the space, right? That being said, the valuation down here is not too bad. I'll be looking to possibly play this one into support. You can see big support here, prior resistance, and now maybe coming to backtest it again. At least we have been doing that since August. Talking about 14 down to about 12. Last earnings was a phenomenal quarterly earnings for them. They crushed EPS, crushed revenue, and the guidance for this quarter was pretty good. They do not have earnings this week. They have earnings next week. So just pay attention to it if it comes down there. Fundamental expansion looks pretty good for the business. I'm not going to lie. Analyst price targets all above the current stock. EPS expanding nicely up and to the right. Revenue expansion rate very solid too. So the stock is currently not that expensive for what it is, and in confluence with the nice support level could be an interesting play. So those are 3 small account plays for you guys. And now for those of you with the very big accounts out there that want to have access to a few of the bigger stocks, here you go. 2 plays. One of them that I'm playing personally, Visa, needs no introduction. We covered them last week after earnings, of course. We established that around 340, 350, they're trading under a 30 forward price to earnings, which is very rare to find on such a high quality company. On combination with that, it's been consolidating here for a better part of the last, 6-7 months. Every time Visa comes into the 12 EMA, it's a very interesting proposition, right? That being said, I'm not playing it full size. I'm playing it half size because if you get a bigger retracement down to the 26, which rarely happens, but sometimes when markets are a little bit choppy, a little bit uncertain. This was COVID, this was the tariff sell-off of 2018, and this was the big bear market. Usually Visa doesn't come down to the 26. In bull markets, a few instances in 2015, but this market has people on edge a little bit, and as a result, I'm playing it with half the size or 2/3 of the size that I normally play it. 340, right? Down to about 330 is the pocket that we want to play. Good valuation, high quality company, and it's just been consolidating for a while. So Visa, still one of my favorite plays for the large account wheel. Number 2, Meta. Meta obviously coming down big after earnings overall. We are currently daily oversold, which means it could be very interesting to start to play for the large account wheel. You can try to find some strikes a little bit lower. Yeah, the next area of support is 640 to 620. It's not the strongest though. It's a very tiny interim level. The biggest level, keep it on the watch list, guys, because the momentum is definitely favoring the bears right now. If you drop a little bit more, you might be able to find the infamous 600 strikes, which is a much better level overall, and just a deeper cut into this big monthly uptrend right there. We established the valuation of Meta after earnings at 700. The valuation was really good, man. You drop another 10% from here. We're almost there already, right? You're going to come into a 20 forward priced earnings for Meta, which rarely ever happens, right? That being said, I can show you the, the options chains for Meta. You can play this 1 week, 2 weeks, 3 weeks out type of thing, right? But if you just go for 1 week out and you're looking to play the drawdowns for 0.5%, I mean, look, we can go all the way down here to like almost 615, 620, and we can get 0.5%, which is very close to the start of our support range. But any additional drop off here into 640, 630, then it's probably going to free up these 600 strikes. So pay attention to this one. If you have a big account, daily oversold conditions, low valuation, and a high quality stock, well, we don't often get the opportunity to play Meta like this. So now is definitely going to be one of those times where I'll look to play it more actively. And with that, that wraps up everything for today's video, all the top 5 and all the bonus plays. Hopefully you guys were able to find something good from all that. If you enjoyed today's video, consider dropping a like. I would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. I would love to have you back, and we are so close to 10,000 subscribers, guys. It's a big milestone for me. So if you could help me towards my 10,000 subscriber goal, I would really appreciate you for that. Last but not least, if you have any questions on the strategy, or if you want to put plays in the comments section that you're looking at, I would love to hear from you, of course, so feel free to give me a comment down below. Would really appreciate it. And last but not least, if you guys are trading the markets alone and are tired of trading the markets alone and want to do so with the help of a trading group and community where we trade the markets every day and also build very high quality long-term portfolios, you may consider joining our trading and investing community. The link to that community is down below in the video description. In the community, you get access to a few things, namely the fact that we specialize in the wheel strategy. You will get all of my trades in real time, all of the wheel trades. We've made a lot of money on the wheel this year. We made a lot of money publicly on the channel in 2024 and 2023 as well. You can see all the trades here. We don't only run the wheel strategy, right? Of course, I do a whole bunch of other strategies too. Call debit spreads, credit spreads sometimes, leap call options, swing trade with shares, and obviously long-term investment portfolios too. Here's just a lot of the trades that we've been making over the course of the past few months. The green little check marks are wins. The red little circles are losses. I like to keep my wins frequent and big, and I like to keep my losses infrequent and small. That's the name of the game when you're trading. So here's just a lot of the trades that we've made over the past few months, always very transparent. And our members have been making very good ROI this year overall, and everybody's very happy with our performance so far. That being said, you also get access to our private morning live streams every Monday to Friday. I trade the mornings from the open for about 2-3 hours. I trade live and I take all of your questions on your stocks, your options, and your long-term portfolios. It's a great place to ask me questions directly and interact with me if you have any questions on trades or things of that nature, right? That being said, if you can't be there, they are recorded, so feel free to watch after. You can also ask me all your questions in our chat rooms all throughout the day, and I'm very fast to answer. You also get access to my private video educational section. Over 15 hours of educational content in there, right? My strategy behind leap options, call debit spreads, credit spreads, advanced wheel strategies as well in there. Some things that I just never show on YouTube. Strategies for the wheel for very large accounts as well are in there too. and how to structure trading accounts, which portion of the trading account should be in which type of strategy to get the best lift, depending on the account size and your risk tolerance, how to build long-term portfolios, videos on technical analysis, fundamental analysis, so many educational videos in that section that our members really love. And last but not least, as a bit of a bonus, you guys just get access to all of my watch lists and all of my charts. If you guys enjoy my support resistance levels, you don't want to draw them on your own. If you just want to copy all my fundamental breakdowns on like hundreds of stocks in my watch list, you can just copy paste all of my charts and all of my watch lists for free. It's just an added benefit. It takes like 15 seconds and they're yours. If you would enjoy participating in any of that, the link to join us down below in the community is in the video description. Hopefully I see you guys in there soon. And if not, I'll see you right back here on the channel. That's it for me, guys. Take care. Have a beautiful week in the markets. Hopefully you guys, you crush it, but just don't be too greedy when the markets are showing some red flags. Take care. See you tomorrow after the close. Peace.